Hey everybody, it's Pete. Good morning. It is Wednesday, May 20th, 2020. Today's 5/20/20. Today we're going to talk about something pretty interesting, which is kind of getting back to the basics. A huge part of the problem with most traders is not the fact that they can't read charts, but the fact that they make them too complicated and the decision-making process becomes cloudy, which leads to indecision. And that means hesitating to get into trades at the right time, which typically means you end up waiting for way too much confirmation and you end up here's the scenario that actually usually goes on in your head. You're like, I want to buy it, not yet, it's moving in my favor, okay, it's confirming a little bit, and then it moves a little more and it moves oh my god, now I gotta buy it, and then it's too late. You get in and it seems like every time you get in it pulls back to a point where you get stopped out, and then the stock does exactly what you thought it would do. We're going to talk about anticipating, and it's actually a really big topic that we had in our Monday night coaching call, where traders believing they were calling out good ideas and then leading to where they thought that they were calling out. I wanted to make sure I worded properly so it's a good lesson. They thought they were calling out good ideas and then feeling like it was their entries that was the problem, when it was really the stocks they were in and when they were in those stocks was actually the problem. So I want to touch on what I do personally, and that's after having gone through everything you could possibly imagine on every charting platform on the planet, which, in case you haven't picked up on it yet, is how I do my game planning, and how I do my game planning without any indicators at all, because I feel like getting into the raw data of the charts really puts you in a position that sometimes you ignore when you're looking at moving averages and all those indicators, because you rely on the indicators too much and you're not actually paying attention to what's the right price. And what I mean by what's the right price is a lot of stocks get caught in these, let's just call it trading ranges, channels, whatever you want to call it, or they have problems getting through a price level, and you're not using the right price level to determine when you should get in. And I believe Slack was a stock that we've been watching for a while. Netflix actually had that for almost a year and a half and finally got through that level and exploded. So what I want to do today is I want to walk you through how to game plan in the most simplistic manner, but it's an effective way because it's what I do every day. We're going to use my universe of stocks, and we're going to actually dial it all the way back to classic technical analysis, which is learning how to draw trend lines properly. If you're an experienced trader or if you're a new trader, pay attention to this one. Like give this video the 5 or 10 minutes while I'm explaining it, and then I challenge you to simplify what you're doing and watch what I'm doing today, because I think you'll find that you're missing a lot of stuff by using too many indicators, and especially using moving averages, because it's very easy to say, well, it's above the moving average or below the moving average, and that makes it a good bullish or bearish opportunity. Nothing could be further from the truth, because there's too many times where you're ignoring the most recent price data, and the moving averages might actually be flat as a board, but because price is below it, you're like, yeah, it's a long, or in this case, a short. And that's where a lot of traders believe they're in good trades, because it's underneath the moving averages or it's above the moving averages, or the moving averages are in the right order. And that's BS. You need to dig deeper into say, is this actually a trading opportunity? Is there really an edge here that if I put my money in harm's way, do I have an opportunity to say, I fully expect it to go in that direction? So we're going to actually do some analysis on what I call my universe of stocks. I have nothing on the charts. We're gonna go stock by stock. We're going to take a look at the market first and get an analysis. But I'm actually going to show something that I found on CNBC this morning, that especially if you're a day trader right now, or like a lot of the millions of people right now who are at home and actually involved in the market on a little bit more regular basis, you're probably getting a lot more gray hair, where the market is basically just trading in the opposite direction almost every day. And you're like, I don't know, how am I supposed to hold a trade when it can't pick a direction? So again, we joke around about it, but It's the old classic breakup quote. It's not you, it's me. In this case, it's not you, it's the market. If you have a feeling that you know what you're doing and you have a track record of being profitable, this is a challenging market to learn in. But if you take anything out of today's video, that means that you should be using this market to challenge yourself to find the right stocks, because when the market's obvious, it's relatively easy to find good ideas and be in the right good ideas. I'm not going to say relatively easy to make money, because that's a learned skill. But when the market's back and forth like it is every day, I don't know why my voice goes hoarse at the same time every morning. But when the market's back and forth every day, you really need to challenge yourself to say, I need to be in the right stocks regardless of the market. And if and when the market picks a direction, whether it's for 2 hours or 2 weeks, you're also getting that wind behind your back, which really amplifies good stock picking ideas. So we're going to talk about stock picking today using no moving averages, no indicators, just working the charts, working the trend lines. And then we're going to hopefully have you guys give some comments back on stocks to see if you're looking at the right thing, as far as I look at the right thing according to the way I do it. So anyway, if you like this video or any of these kinds of videos, please click down in the corner, give us a thumbs up, subscribe so you get updates, and absolutely leave a comment. So we're going to move over to the charts. And here's here's the data that I found on CNBC this morning, just doing some daily reading. This is actually the percent change on a daily basis for the S&P right up to yesterday's close, which was May 19th. You can see that the lack of consistency from one day to the next is just mind-boggling, actually. We haven't had any kind of persistent moves to the upside or downside. You'll see anywhere from 3 to 7 moves in one direction, and we are just, I can't even word it. It's just the inconsistency is mind-boggling. But if you happen to be watching the market, it's not really mind-boggling, because let me get this out of the picture here. This is the picture that I've had in the SPY. We're actually going to start out with the SPY here, because this is what I do every day. I work the charts. If you're in the coaching program, you'll hear me work the charts, work the keyboards. And that means you're not just passively looking at what's going on in your watch list. You cannot possibly learn enough about what's going in your list just by, oh, that's up $1.82, that's down $5. You need to work the charts, go keyboard by keyboard, stock by stock on your keyboard, work the charts, work the charts, work the charts. It's the only way to get a feel. And then taking that even a step further is actually drawing price levels that stocks need to get to, and then anticipating if a stock gets to a certain price, you need to have alerts set, or you need to have a small order to get filled at that price, because now your stock is doing something significant. And this doesn't matter if you're day trading, swing trading, or position trading. You still need to work the charts, whether it's on the daily charts, weekly charts, or monthly charts. So just to be clear, all of my game planning analysis, I should say 90% of it is on the daily chart, and then I pull back to the weekly and monthly too to see if I missed anything. So if you're feeling like the market has been chaotic, you're right. The bounce off the lows, which many might consider a dead cat bounce, and it might have been called a short covering rally, but short covering rallies usually fall back much quicker, because the short covering implies you were short selling and then you had to buy it back really quickly, and then new buyers jump on top and you get a fast move to the upside. But that usually peters itself out and you get a fast move back to the downside. We actually haven't seen that yet. So it's kind of interesting. Now, I'm not implying we're going to race back to the all-time highs, but I think it is interesting that we've been kind of staying in these windows. But again, this is all about being in the right stocks at the right time. So you need to first determine, is the market obvious, and is there room to go? And you can see right now the consensus in the market is that there is no decision to be made right now. There is no bias other than the fact that we bounced off the lows. So in my opinion, in my bias, in my tape reading perspective, the market has been sideways. And there is no, the market's strong or the market's weak. The market is doing nothing right now, and every single day it's bouncing back and forth. From a day trading perspective, you can hop on these intraday price explosions like we had on Monday, where we opened higher and continued to trade higher the rest of the day in a lot of stocks. But from a swing trading longer term perspective, the market is sideways. So I don't care what you're looking at right now, we are sideways. There's no other way to put it. So that's the SPY. Now we're going to take a little bit deeper look into the Qs, and we're going to draw this line, by the way, is the weekly chart, just to give you a perspective. So again, learning how to work the charts. So now in the Qs, we have a little bit different perspective where we're going to draw where we actually broke the trend line, which was here. Now, again, when you're drawing proper trend lines, you do not want to trade through any price action. You want to go from the lowest low for an uptrend, and you're drawing it through no prices, and you draw to where it finally breaks. So this is technically where we broke the trend line, and that would be the first level to tell you that we have changed trend, and we have not in the Qs. As a matter of fact, we actually have started to make new highs. So you could, if you wanted to, actually redraw the lines, because as you start to make new highs, your new levels are now changing. So now I would be working it this way, because you want to draw through the high, from the lowest low to the highest low. And this is where the the Qs has now traded through. I'm trying to look at my screen and talk to you at the same time. So this is now the new box that the Qs is in. So really what's going on now is the Qs are now in a box, and we need to wait for the Qs to get out of this. We thought it happened on Monday, thought it happened on Tuesday, but then that news about mRNA pulled it back, pulled the entire market back a bit. But if I had to choose between the SPYs and the Qs are actually in a little bit more decent uptrend. The Qs are actually positive from this collapse back here, which a lot of the other ones are not. So we'll just take a quick look back at the SPY, and we'll look at the diamonds as well. You can see the diamonds, the Dow, the ETF for the Dow is actually in an even longer, more pronounced box. So what does that mean? That means that right now the market itself is not helping us at all. So what that basically means is we need to be much better stock pickers now, if and when and until the market finally gets out of this indecision and helps us for more than a day and a half, right? So what I'm going to do now is we're going to jump into stock-specific ideas and determine which ideas have had the most legs or the most room to go and the most persistency from 1 week to the next, not 1 day or 1 hour to the next. So if you've been watching and a regular person of the channel, you know I have my universe of stocks, and we're going to start out with looking at Apple. So Apple, drawing the trend lines, and by the way, I deleted all my trend lines, or most of them, just for this. For today's video. So we start at the lowest low, we go up through where price action happened and ultimately where Apple broke the trend line. And now we have this new box in Apple where we are saying, okay, Apple is absolutely in a bullish trend from March. Let me zoom this out a little bit. From the March lows. And now we're setting up opportunities. So Apple is now in this box. And something I want to point out here as well. I am always looking for where price, this is actually a good lesson here. I'm always looking for where price action is having a hard time getting through when I'm drawing these boxes. Now where it crosses the trend line, that's the normal draw it down, that's where it crossed. But this is interesting here because it's very easy to say up here is, I'm going to keep zooming this out so it's easy to see. It's very easy to say that up here is where stock traded to. But if you dig a little deeper, this price pushed higher, and then the next day it came back in, and it tested here again, and it couldn't get through that level again, got through the level and came back in. So in my analysis, in my tape reading, that is the real price that Apple needs to get through to start a new move to the upside. You can see here, it closed here, got through here and came back, tested it again here, tested it again here, closed right at that level, tested it again here, and traded back down through the level. So that's the real level that Apple is now in a box. And actually we drew this a little bit tighter now because we zoomed out, and that's the window. So the point that I'm trying to make here is if you're a longer term trader looking for ideas in Apple, it needs to resolve this price action. So any trade you make inside of this tight window, which again, tight window is $15, you're not going to have the consensus of the market behind you. It needs to break this consensus of that being the right price. And that's the technical definition I use. That's the right price until we get out of there. And I talked about work as an example because we had a really good image here. This is the same thing that happened to work. And we've been watching work in the coaching room for a while now, and you can see it hasn't gotten through there. So there was absolutely nothing to do in this stock until now, where it finally got through there and stayed there. So now the new swing trade long, or the new position trade long, is a move up and above this 32 level. So I just want to keep pointing that kind of stuff out, because the reason most traders lose money is they're trading without an edge. Well, they don't have an edge in the first place. They're not implementing their edge, or they're implementing it at the wrong time. So we're going to keep moving along. We're going to go into Boeing, which has been a very interesting stock that has driven a lot of day traders crazy. As you can see that, again, working the charts, Boeing just keeps consolidating, 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 and there's literally no edge here. Right now, we're waiting for Boeing to pick a direction before we hop on board. So again, mentally picturing whether or not you're in the right stocks, you need to be able to say the stock has an edge or it doesn't. Sure, one day to the next, it might be up 5%, 7%, but that's one day. That's one day of buying pressure. You're having a hard time looking to the left, making an argument for whether or not you should be in that stock. So moving along, we're going to go into CVX, and you can see the box that I drew in CVX. And again, clearly bouncing to the upside, clearly stuck in this box now. So there's no trade here. My point is, if you're having a hard time making money, you need to pay attention to whether or not your stock is at the right price right now, and if and when it gets out of that price, what your priorities are, to the long side as a seller, or to the the short side as a seller, or the long side as a buyer, and what would you do? So now we can go over to the financials, which has been, again, the same thing. Goldman Sachs in a box in this window, so really not using it as an indicator stock. But JP Morgan, you can see reported earnings here, and most of the days have been red, and the easier trades in JP Morgan, for me specifically, which I've been talking about every day, have been to the short side. As a matter of fact, most rallies in JP Morgan have been a short sell for me personally as short-term day trades. So you can see that I was actually looking for it to open higher yesterday into resistance and then look for another short sale. It didn't, but this is not as in a defined box, so I'm looking to short sell the stock with a little bit more conviction. So again, simple moving averages work, but they don't tell you what actual prices are, because we tend to just look at them and say, okay, it's above or below, without really digging in and reading the tape. I want to talk about a couple of other stronger stocks that we've been trading. PayPal actually getting to all-time highs. So this is an interesting situation here where, yes, it's clearly strong, clearly bullish, clearly got up to that price level. But now here's the big but. What's the trade? The trade is only long. The trade is now, we have to get out of this 7-day trading range. So again, if you see this price action, this is where a lot of traders don't go deep enough. They don't make enough distinctions. Is we have 1, 2, 3, 4, 5, 6, 7 days inside of the day of the gap. There's nothing to do in this stock, unless you're day trading and you look for day trading opportunities. There's nothing new to do in this stock until it gets out of this window. It's stuck in a 7-day trading range. Why would you do anything in a stock? Why would you initiate a new trade, especially a swing trade in a stock, where it's not moving? That's the right price. And again, it's definitely above the moving averages. But if you draw some simple trend lines, it's not doing anything. It's clearly bullish. Clearly, we want to be long. Clearly, at all-time highs. But let it resolve itself out of this window. And the point I'm trying to get across here is, when you're trading in these windows, that's where money goes to die. There's no trades here. You need to let it tip its hand before you get involved. Now, clearly we want to be long. Clearly we opened up at new all-time highs, and we're getting a little bit of profit taking. The right trade is to be long in this scenario, because you do not want to short sell all-time highs. We talked about that ad nauseum in our meetings. But my point is this: simple tape reading, simple technical analysis, simple chart reading, whatever you want to call it. I call it tape reading because I think it's going deeper than just saying I want to be long or short. Will keep you out of trouble, which keeps money in your pocket. And then ultimately, when the stock does exactly what you were planning for, and we'll go back to Netflix, which was the big trade, and you can see this was actually the level it was having a hard time getting through, going all the way back to June, July, and August of 2018. Planning for it, finally got through that level and has been a nice bullish trade since then. So I guess the point that I want to make is that trading is as hard or as simple as you make it. And I'm telling you, as an experienced trader, that we as a community can keep it simple, but it needs to be the same thing you do every single day. It needs to be, this is how I'm looking at the market. This is what I'm looking for in the market. If and when I see this, meaning how I'm showing you to look at the market, then you have an edge. But just as importantly, is when you're drawing your trend lines, when you're drawing your boxes, when you're drawing the right price, when you're drawing and setting alerts at certain levels it needs to get through, and you start anticipating what you're going to do instead of reacting, that's when you can position yourself to be someone who makes money on a regular basis, because you're not throwing money away when it's not obvious, and you're in position because you've anticipated and set alerts for when, if something happens, you're going to take action. So I challenge you for a week, move all the garbage off of your screen. I know it's going to be uncomfortable. I challenge you for a week. Do nothing but draw trend lines. Do nothing but try and find the right price. Do nothing but, I challenge you to say, what's the right price? This thing keeps bopping up and coming back, or going down and coming back up. What's the actual price it's having a hard time getting through? And draw your line there and say, now I'm going to set an alert when it gets through that price, because that's the real price that buyers or sellers are having a hard time getting it through. If it does get through that level, that means something changed, and I want to hop on board. So that's going to be my challenge to you, to try and figure out how to do this, get away from your safety net of just using the moving averages, and see what you can do and see how it changes your trading. I guarantee you're going to wake up and you're going to be like, I can't believe how many stocks I was trading in the middle of nowhere. And that's why you're frustrated, because you're not taking trades that have potential to make money in exchange for that risk that you have to accept for that profit potential. So leave me some comments. If you take the challenge, if you get in there, remove all the indicators and just start to read the price action, I'm pretty sure that you're going to say, I can't believe how much more complicated I was making it, and I can't believe how many trades I took that I shouldn't have been in the first place. And I'd love to hear your feedback. Have a great day, everybody. Thanks for joining me today.